There's an old saying among surfers, you don't catch the wave by chasing it. You position yourself where it's going to form, and you wait. Most beginners exhaust themselves paddling toward waves they can already see, waves everyone else is riding. But those waves are already breaking. The energy's already released. The professionals do something different. They study the ocean. They read the rhythm. They position themselves in empty water that looks like nothing's happening. And they wait. Patiently. Uncomfortably. While everyone else is busy riding tiny shore breaks, they're sitting in position for the set wave that hasn't formed yet. Trading explosive trends works exactly the same way. But most traders are too busy chasing what's already breaking to position themselves where the real wave is forming. And I know exactly where you are right now. You've seen these massive trends happen. You've watched stocks go from $20 to $200. You've seen crypto assets multiply by 10, 20, 50 times. You've watched commodities explode. And every single time, you felt like you were late. You saw the move after it already happened. You entered after the momentum was obvious. You paid premium prices for what smart money bought months earlier when nobody cared. And you're exhausted from always feeling behind, always chasing, always entering after the explosive part is over. This video isn't about another indicator. It's not about a new pattern or a complicated system. You don't need more technical analysis. What you need is a completely different relationship with discomfort. Because the core pain, the thing I know you feel every time you see a chart that's already up 300%, is this. You know trends exist. You've seen them. You've studied them. But you always feel late. You enter after the move has started, you chase what's already expensive, and you exit too early out of fear that it'll reverse. That cycle of being late and leaving early is costing you the only gains that actually matter in trading. The explosive ones, the life-changing ones, the moves that turn small accounts into real wealth. Here's the unique insight that changes everything, the perspective that separates the traders who capture explosive trends from the ones who watch them happen. The strategy most traders ignore isn't technical, it's positional. It's about entering before momentum, before confirmation, before it feels safe. And this video is going to show you exactly how to identify nascent trends when they're still invisible to most people. How to position yourself in that discomfort zone where nothing seems to be happening, and how to hold through the psychological warfare that shakes out everyone else right before the explosion. The myth-busting reframe you need to understand is this. Catching explosive trends isn't about perfect timing or complex systems. It's not about having better software or more screens or access to information others don't have. It's about developing tolerance for being early. The traders who capture those life-changing moves, the ones that make you wonder how they knew, they're not lucky. They're not insiders. They're just willing to be uncomfortable longer than you are. They're willing to sit in positions that aren't moving while you're over there chasing whatever's hot today. So what you're going to take away from this video is a complete framework for identifying trend formation before it's obvious. The specific psychological tools to enter when every cell in your body says wait, and the conviction to hold when everyone around you is selling. And we're going to start with a story that makes this crystal clear. Imagine a farmer who only plants seeds after rain has already started. Seems logical, right? Rain means water. Water means the conditions are good. Water means growth. It's confirmation that the environment is right for planting. It makes perfect sense. But here's the problem that this farmer doesn't see. By the time the rain comes, by the time conditions are obviously perfect, every other farmer in the entire region is planting too. The best land is already taken. The supplies, the seeds, the equipment, everything is suddenly expensive because everyone wants it at the same time. Everyone's competing for the same resources at the same inflated prices. The wise farmer, the one who actually builds wealth generation after generation, does something completely different. He studies weather patterns before anyone else is paying attention. He reads the wind shifts. He watches the clouds forming on the horizon. He feels the temperature changes. He notices the pressure drops. And based on all of that information, based on probability rather than certainty, he plants before the rain comes. When the ground is still dry, when it looks like absolutely nothing is about to happen, when all the other farmers think he's crazy for wasting perfectly good seed in dusty, hard soil that doesn't look ready, and then the rain comes, just like he predicted based on the patterns he studied, and his seeds are already in the ground, already positioned, already starting to germinate with that first rainfall. While every other farmer is scrambling to get their equipment out, scrambling to buy seeds at inflated prices, scrambling to plant in the middle of the storm, his crops are already growing. He captured the entire growth cycle because he was willing to act on probability before certainty arrived. He was willing to look stupid temporarily for the chance to be right spectacularly. Explosive trends in markets are that rain. They're the sudden surge of momentum, of volume, of price movement that everyone can see and everyone wants to participate in. And most traders, just like those reactive farmers, wait until the rain is pouring, until momentum is obvious, until everyone's talking about it, until CNBC has special coverage before they plant their capital. But by then, the best stock prices are gone. The explosive phase is mostly over. They're buying from the farmers who planted in the dust. They're buying from the traders who positioned before it was obvious. The traders who get genuinely wealthy from trends, who capture those moves that change their lives, are the ones who plant in the dust, who position themselves based on what they see forming before anyone else notices, who are willing to sit there looking at a position that's doing nothing, that's boring, that their friends think is stupid, waiting for the rain they know is coming. But here's what no one tells you about planting before rain, about positioning before explosive trends. Here's the part that makes it so difficult that most traders can't do it, even when they understand it intellectually. When you plant in dry ground, when you position yourself early in a nascent trend, you sit there watching your seeds do absolutely nothing, day after day, week after week. The ground is dry. Nothing's sprouting, nothing's growing, and every day you're out there looking at dirt while other farmers are harvesting crops they planted in easier conditions. And you start to doubt. You start to think maybe you read the patterns wrong. Maybe the rain isn't coming. Maybe you're just wasting resources on nothing. That doubt, that discomfort of being early, of sitting in a position that isn't rewarding you, that isn't validating your analysis, that's what shakes out 95% of traders before the explosive phase begins. They can't tolerate looking at nothing. They can't tolerate the opportunity cost. They can't tolerate their trading buddies asking them why they're sitting in some boring stock that hasn't moved in 3 months when there are dozens of things moving right now that they could be trading. So they exit. They give up on the position. They plant their capital somewhere else, somewhere that's already raining, somewhere with immediate confirmation. And then, usually within weeks of them exiting, the rain comes. The trend explodes. The stock they sold at 22 goes to 60. And they watch it happen without them. And they don't understand that they had perfect analysis. They were right. They just couldn't tolerate being right early. Let me give you another image that clarifies this even more. Every explosive trend, every single one without exception, has 3 distinct phases, and understanding these phases is critical because it shows you exactly where the money is made and where it's lost. Phase 1 is distribution. This is where the previous trend ends, where the people who bought at the bottom are selling to people who are buying at the top. It's where smart money is exiting and late money is entering. This phase is characterized by high volume, lots of excitement, everyone talking about the asset. It feels great to be in during distribution because there's so much action. But if you're buying during distribution, you're the exit liquidity for people, smarter than you. Phase 3 is explosion. This is where price goes parabolic. where the chart looks like a rocket ship, where volume floods in, where momentum is undeniable, where everyone notices, where your barber is giving you tips about it. This is the phase everyone wants to catch. But here's the problem. By the time you're in the explosion phase, you're already late. Most of the percentage gain is behind you. You might catch 20–30% if you're lucky, but the people who are really making money caught 200–500% before the explosion even started. And then there's the phase no one talks about, the phase that most traders completely ignore because it's boring. It's called accumulation. This is the invisible phase. And this is where all the real money is made. During accumulation, price moves sideways, sometimes for weeks, sometimes for months. Volume dries up dramatically. Nothing exciting happens. The chart looks dead. It looks like the asset is going nowhere. There's no momentum, no breakouts, no action. It's so boring that it doesn't even show up on momentum scanners. It's so quiet that no one's tweeting about it. And 99% of traders scroll right past it because there's nothing there. No dopamine, no excitement, no immediate reward. But this phase, this boring, dead-looking, sideways grind, is when the smartest money is quietly positioning. They're buying from people who are bored, from people who are impatient, from people who need excitement and action, from people who can't tolerate holding something that's not moving. They're accumulating shares, contracts, coins, whatever the asset is, in complete silence while everyone else is distracted by whatever's currently exploding in Phase 3 somewhere else. And then, after weeks or months of this boring sideways grind that felt like it would last forever, something shifts. Sometimes there's a catalyst, an earnings report, a regulatory change, a macro event. Sometimes there's no clear catalyst at all. Simply enough, weak hands have been shaken out. Simply enough, supply has been absorbed. Simply the conditions are finally right. And the explosion phase begins. Price gaps up. Volume floods back in. Momentum builds. The chart starts climbing. And suddenly everyone wants in. Suddenly it's showing up on scanners. Suddenly people are talking about it. Suddenly it feels safe. And the masses flood in, buying from the smart money who accumulated in silence, who sat through the boring phase, who tolerated the nothing. So here's the question that should be burning in your mind right now. What exactly signals the end of accumulation? How do you know when to enter before the explosion, but not so early that you're sitting in a dead asset forever? Because that's the skill, right? That's what separates profitable trend traders from people who are just early to things that never move. And this is where we get into the actual strategy, the framework that most traders ignore because it requires psychological strength they haven't developed. Here's the fundamental truth about catching explosive trends, and you need to really hear this. The best entry point will always feel wrong. Always. If it feels right, if it feels safe, if it feels comfortable, if everyone agrees with you, you're already late. You've already missed the explosive phase. Why? Because markets are incredibly efficient at pricing in comfort. When something feels safe to buy, when it feels obvious, when it feels like a good idea that everyone can see, it means enough people have already bought to create that feeling of safety, which means the price already reflects their demand, which means you're paying the premium for their early risk. You're buying their comfort. You're compensating them for the discomfort they tolerated when they bought earlier. And comfort in markets is expensive. The explosive phase of a trend rewards the people who entered during the uncomfortable phase, the sideways grind, the boring accumulation, the period where absolutely nothing was happening and you felt stupid holding a position that wasn't moving while everything else was. The period where your friends thought you were an idiot for sitting in some stock that had been flat for 2 months. That discomfort, that boredom, that feeling of wasting opportunity, that's the price of admission to explosive gains. Most traders simply can't tolerate it. They need movement. They need confirmation. They need to feel smart. They need their positions to validate them immediately. So they wait until the trend is obvious, until the explosion has started, until CNBC is covering it, until their entire Twitter feed is talking about it, and they enter at prices that already reflect all of that consensus. They enter after the explosive phase has already consumed most of its energy. So here's the reframe that changes everything. Discomfort isn't a warning that you're wrong. In trend trading, discomfort is often confirmation that you're early. And early is precisely where you want to be. The question is, can you tolerate being early? Can you sit in a position for weeks or months, waiting for the market to catch up to what you see? Most traders can't. And that's why most traders miss explosive trends. Now let me give you the technical signal that most traders completely ignore. It's not complicated. It's not some proprietary indicator. It's something you can see on any chart if you know what to look for. And it's called decreasing volume on pullbacks during an uptrend. Here's what this looks like and why it matters. Imagine you're looking at a chart that's been in a slow, grinding uptrend, nothing explosive, just slowly making higher lows over weeks or months. And during this grind, every time price pulls back, every time it dips, the volume on those pullbacks gets smaller and smaller. Each dip has less volume than the previous dip. What does this tell you? It tells you that sellers are exhausted. It tells you that weak hands are already out. It tells you that every time price dips, fewer and fewer people are willing to sell. And mathematically, that means the next move up is going to face less resistance. There's less supply in the way. The path is clearing. But here's the psychological problem that prevents most traders from acting on this signal. Low volume feels like low conviction. It feels like the market doesn't care. It feels like there's no interest, so traders avoid it. They want high volume because high volume feels like confirmation. High volume feels like the market is paying attention. High volume feels safe. But by the time volume spikes, by the time everyone's paying attention, you're not buying accumulation anymore. You're buying distribution. You're buying from the people who accumulated during the low volume phase. You're paying them for their patience. And the explosive part of the move is largely behind you. The strategy, the approach that most traders ignore, is to learn to love the boring. Learn to buy the quiet. Learn to position yourself during accumulation phases that feel like nothing's happening. Because that nothing is everything. That silence is where fortunes are positioned. That boredom is the price you pay for capturing explosive trends. But here's the challenge, and this is where most traders fail, even when they understand everything I've said so far. There's a paradox in trend trading that destroys people who aren't prepared for it. And the paradox is this: you have to be willing to be wrong for a long time to be right in a big way. When you enter a trend early, during accumulation, before the explosion, you're going to sit through drawdown. The position is going to go against you. You're going to watch it go red. You're going to feel stupid. You're going to question your analysis. You're going to wonder if you misread the signals. And that psychological pressure, that discomfort of watching a position lose money day after day, is specifically designed by the market to shake you out. The market tests your conviction with time and discomfort. It makes early entrants suffer just enough that most of them give up right before the payoff. They enter with perfect analysis. They're right about the trend. They identified accumulation correctly. They positioned themselves beautifully, and then they exit from emotional exhaustion, from the inability to tolerate looking wrong. And they watch the trend explode without them. I've done this myself more times than I can count. I've had perfect analysis on stocks that went on to triple, quadruple, 10 times from where I first entered. But I exited in the accumulation phase because I couldn't handle the drawdown, because I couldn't tolerate the boredom, because I needed the capital for something that was moving right now. And every single time, I watched that position explode within weeks of my exit. every single time, I was right about the analysis and wrong about the execution. Because I couldn't separate temporary discomfort from being wrong. Here's what separates profitable trend traders from everyone else. They pre-commit to the drawdown. They expect it. They plan for it. They size their position knowing they're going to be underwater for weeks or potentially months. They don't confuse temporary discomfort with being wrong. They understand that being early and being wrong look identical in the short term. Only time reveals which one you were. And if you can't tolerate looking wrong temporarily, if you can't sit through drawdown, if you can't handle your position going against you while you wait for the market to catch up to your analysis, you will never catch explosive trends. It's impossible. So how do you develop this tolerance? How do you position yourself early without getting shaken out? This is where most trading education completely fails people. They give you the technical setup. They show you the patterns, but they don't give you the psychological framework to actually execute it. So let me give you that framework right now. First, you need conviction based on fundamentals, not just technicals. You need a thesis, a reason why this specific asset, at this specific time, in this specific context, has asymmetric upside potential. Maybe it's undervalued relative to its peers. Maybe there's a catalyst coming that the market hasn't priced in yet. Maybe the narrative is shifting in a way that favors this asset. Maybe the industry is at an inflection point. Whatever it is, you need conviction that transcends what you see on the chart. Because here's what happens without conviction. The first pullback shakes you out. The boring sideways action makes you doubt. The opportunity cost of sitting in something that's not moving makes you rotate into whatever's currently hot. You become a trader who's always chasing today's momentum instead of positioning for tomorrow's explosion. But when you have conviction, when you understand why this asset has potential beyond what the chart shows, you can hold through the discomfort. You can add to your position on pullbacks instead of panicking. You can ignore the noise. You can be early and stay early until the market catches up to your analysis. You can tolerate being wrong temporarily because you're confident you're right directionally. So, the filter, the thing that determines which accumulation patterns you actually trade, is this. Only position yourself in trends where you have genuine conviction in the underlying thesis. Because technical setups without conviction are just gambles dressed up as strategy. They're coin flips. And you can't hold a coin flip through drawdown. You can only hold conviction through drawdown. Now here's the mistake that kills even traders who have conviction. They size their position for what they hope will happen instead of what they can tolerate happening. They enter early. They know they might be in drawdown for a while. They understand the concept intellectually, but emotionally they size like they're entering at the perfect moment, like they're entering at the exact bottom with perfect timing. And when the position inevitably goes against them, when they sit through weeks of drawdown, when they watch their account value decrease, the pain becomes unbearable. It's not that they were wrong, it's that they sized wrong for being early. So they cut the position to stop the emotional pain. Right before it works, right before the accumulation phase ends and the explosion begins. The solution is so simple, but almost no one does it. Size for the journey, not the destination. If you know that early entries mean sitting through drawdown, then size small enough that you can emotionally handle being down 20 or 30% and still hold without panic. Because if you're right about the trend, if your thesis is correct, that drawdown is temporary noise. It's the market testing your conviction. It's the shakeout before the breakout. But if you're sized too big, if you have too much capital in a position that's going against you, that temporary noise becomes a siren that you can't ignore. It forces you out. Not because you were wrong, but because you couldn't tolerate being right early. The principle is this. The size of your position should be inversely proportional to how early you are. The earlier you enter in the accumulation phase, the smaller you size. This isn't conservative trading. This is strategic trading. This is what allows you to stay in the game long enough for your analysis to play out. This is what separates traders who capture explosive trends from traders who identify them perfectly but can't hold them. So let's make this completely practical. Let me give you the exact steps to implement this strategy starting right now. Step 1. Identify accumulation zones. You're looking for assets that have been trading sideways for weeks or months after a significant move. Not dead, not declining, sideways. Price making higher lows on declining volume. This is the fingerprint of accumulation. This is smart money quietly positioning while everyone else is distracted. Create a watch list of these assets. Not to trade immediately, not to rush in, but to monitor, to watch, to study. You're looking for the end of accumulation, for the signal that the boring phase is about to transition into the explosive phase. Step 2. Build your conviction thesis. For each asset on your accumulation watch list, you need to write down why it has asymmetric potential. What's the fundamental catalyst? What's undervalued about it? What narrative is shifting in its favor? What does the market not understand yet that you see? If you can't articulate conviction beyond the chart looks good, it doesn't belong in your trend portfolio. Because conviction is what allows you to hold through drawdown. Build it before you enter. Write it down. Make it concrete. Step 3. Plan your early entry. Don't wait for the breakout. Don't wait for confirmation. Don't wait until it feels safe. Enter during accumulation with a small position. Accept that you're probably going to be early. Accept the drawdown that comes with being early. Set your stop loss based on thesis invalidation, not pain tolerance. If the fundamentals change, if your thesis is proven wrong, exit. But if you're just uncomfortable, if the position is just not moving, that's not a reason to exit. That's the test. And most traders fail it. Step 4. Scale as the thesis confirms. As the trend begins to emerge, as accumulation transitions to explosion, as volume picks up on the breakout, as momentum builds, add to your position. You entered small and early when it was boring. Now you scale up as it's confirming. This inverts the normal mistake of entering big and late. You're sized big at better prices. You accumulated during the quiet phase. And now you're riding the explosion with size. This is how you capture life-changing moves. All of this sounds simple, and it is simple. The framework is straightforward. The technical signals are clear. The position sizing makes mathematical sense, but simple doesn't mean easy. Because what I'm really asking you to do, what this entire strategy requires at its core, is to become comfortable being uncomfortable. To develop tolerance for being early. To sit in positions that aren't rewarding you immediately. To ignore what everyone else is chasing. To trust your analysis when the market is testing your conviction. To be willing to look stupid temporarily for the chance to be right spectacularly. And that's not a technical skill, that's a psychological skill. It's a muscle you develop through practice, through experience, through sitting through drawdown and learning that it doesn't kill you, through being early and staying early until you're right, through watching positions you exited explode and learning the painful lesson of shaking yourself out. We started this video by talking about surfers, about how they don't chase waves, how they position themselves where waves are going to form, how they sit in empty water patiently while everyone else exhausts themselves chasing what's already breaking. And now you understand that explosive trends work exactly the same way. You learned that 95% of a trend's profit happens in 15% of its duration, that the explosive phase happens after accumulation, not before. That the best entry point will always feel wrong because comfort is expensive. That being early and being wrong look identical temporarily, and only conviction and proper position sizing allow you to survive the test until time proves which one you were. You saw that the strategy most traders ignore isn't technical complexity. It's psychological simplicity. It's the willingness to plant before the rain, to position before the explosion, to buy the boring and hold through the discomfort while everyone else is chasing what's already expensive, to sit in empty water waiting for the set wave that hasn't formed yet. Now listen to this truth and let it sink all the way in. You're not late to every trend because you're unlucky. You're not missing explosive moves because you don't have the right indicators or the right education or the right information. You're late because you wait for certainty that only exists after the opportunity is gone. You wait for confirmation that costs you most of the gain. You wait until it feels safe, and safety in markets always comes at a premium. The market rewards conviction in the face of uncertainty, not comfort in the face of consensus. It rewards the people willing to be uncomfortable, willing to be early, willing to sit in positions that aren't moving, willing to look stupid for weeks or months while everyone else is chasing daily momentum. And you can learn to be that person. You can learn to be early. You can learn to hold. You can learn to ride the explosive phase instead of watching it happen. But only if you're willing to be uncomfortable first. Only if you develop the tolerance for accumulation phases that feel like nothing. Only if you can separate temporary drawdown from being wrong. Only if you size appropriately for being early. Only if you build conviction that transcends the chart. The traders who capture life-changing trends aren't smarter than you, I promise you that. They don't have access to better information. They don't have secret systems or proprietary indicators. They just develop tolerance for being early. For sitting in positions that aren't moving while you're chasing what's hot. For looking stupid temporarily. For buying what everyone else thinks is dead or boring or not worth their time. And here's the beautiful truth that should give you hope, that tolerance is completely trainable. It's not genetic. You don't need to be born patient. You don't need to be naturally brave. You don't need some special personality type. You just need to start small, build conviction, practice holding through discomfort until what once terrified you becomes normal. Until being early feels better than being late, until positioning before the explosion becomes your default instead of chasing after the breakout. The explosive trends are already forming, right now as you're watching this, in assets that look dead to most people, in charts that seem boring, in opportunities that everyone's scrolling past because there's no action, no momentum, no immediate gratification. The accumulation phases are happening in silence, while the masses are distracted by whatever's exploding today. The question isn't whether opportunities exist. They always exist. The question is whether you'll position yourself before the wave or whether you'll keep exhausting yourself chasing waves that have already broken. Whether you'll plant before the rain or scramble with everyone else after it starts pouring. Whether you'll learn to love the boring accumulation phase or continue paying premium prices for confirmation that comes too late. If this video changed how you see trend trading, if you finally understand why you've been late to every major move and what you need to do differently, I want you to share in the comments one asset that's currently in accumulation that you're watching. Not that you're trading yet, not that you're recommending, just one chart that fits the profile. That's been sideways for weeks or months. That has declining volume on pullbacks. That nobody's talking about. That looks boring but has potential you see that others don't. Because sharing that, naming it publicly, is the first step in building conviction. It's the first step in committing to being early. It's the first step in tolerating the discomfort of positioning before the crowd. And if this video gave you permission to be early instead of always chasing, If it showed you that the discomfort you feel when looking at boring accumulation phases isn't warning but opportunity, hit the like button. Not for me, for the algorithm. So this perspective can reach other traders who are exhausted from always being late, who know trends exist but can't figure out how to catch them, who need to hear that being early is learnable. Subscribe to this channel if you want more truth about the psychology that separates trend riders from trend chasers, about the mental frameworks that allow some traders to capture explosive moves while others watch them happen, about the conviction building and position sizing and patience development that textbooks don't teach but that determine everything. And remember this as you go back to your charts: the next explosive trend won't announce itself with fireworks. It won't send you a notification. It won't wait for you to feel ready. It'll form quietly in the accumulation phase while everyone's looking elsewhere. It'll whisper in the silence of sideways price action and declining volume. And only the positioned will be there to catch it. Only the traders who learn to plant before rain. Only the surfers sitting in empty water waiting for the set wave. Be one of those traders. Position early. Build conviction, size appropriately, and hold through the test. See you in the next one.